So it's great to be back in Austin. Actually, I was joined by Dr. Oishi and David about a week and a half ago for another blockchain real estate conference. My name's Ryan Zega. I'm an Associate Director of Business Development and Capital Markets at tZERO. Joined the firm a little over a year ago. My background's primarily in institutional commercial real estate. Prior to joining tZERO, I was Director of Acquisitions at Paramount Group, the publicly traded REIT. Prior to that, I worked for a vertically integrated real estate fund operator, and then I was also an analyst at Prudential Real Estate Investors. So I've worked on a number of different structures, primarily focused on office product in all different types of geographies. I'm certainly glad to be here representing tZERO. For those who do not know, tZERO is a secondary trading platform. We own a series of broker-dealers that facilitate secondary liquidity for security tokens. Real estate remains our largest group by terms of issuers that are looking to onboard and trade on the ATS. I'm actually joined today by Dr. Masaki Oishi, chairman and co-founder of MarketSpace Capital, as well as David Wallace, founder and CEO of DGW Advisors. So Dr. Oishi and David Wallace are actually taking a real estate asset, which is a 250 unit active adult living development in Dallas, Texas, tokenizing it and having it trade on our ETS. So they're going through the process, and this is really meant to be an informal, kind of like informational, practical type of fireside chat where we'll kind of delve into that specific project, what brought them to tZERO, and what the process looks like currently. David and Dr. Oishi, thank you for joining me. It'd be great if you could just tell us a bit more about MarketSpace Capital as well as your respective backgrounds.
Yes, of course. Hi, my name is Masaki Oishi. I'm a spine surgeon by training, but I've been involved in real estate for many years. In fact, since I was 15, my parents made me do a lot of the paperwork and dealing with paying taxes and all that sort of thing. But I think when I started MarketSpace Capital, which is the company that is currently developing this project, our goal really was to try to bring more investors to the real estate market and to bring our approach, which is very data-driven and also based on principles like inclusivity and sustainability to the marketplace. But I think our main goal continues to be trying to knock down the barriers that prevent so many potential investors from entering the marketplace in the first place. I don't know if this is working good.
Can you hear me now? Good. Guys, it's a pleasure to be here. And before I say anything about myself, I do want to say something else about Dr. Oishi. He's a very talented investor, and again, as a very successful neurosurgeon in the Houston market, he's done a lot in that field, but also in real estate. So many times when we talk about him saving lives during the day and doing real estate investing at night, that really is what he is doing. And I will tell you that the company has gone full cycle on 6 of their properties. Under his leadership, the average was about a 28% internal rate of return to the investors, not just at the property level. So that's kind of the Midas touch that he has. And he's recently written a New York Times best-selling book called Prescribing Real Estate, and it's kind of a doctor's guide to passive investing. So he knows a lot about it, and in fact, he's even written the book. From my own perspective, and before I do that, I do want to say thank you to all of you, because I think it's really important. We are all, and I think you've heard what I thought were some really good motivational things. Like David, when he first got up, it was almost a motivational speech that he was giving to all of us in the room. And we really are all standing shoulder to shoulder. And this is one of those things that the more we do this together, I don't consider anybody competition here. We want as many real estate syndicators, whether the industry class is hospitality, whether it's office, industrial, multifamily, we don't care. We want everyone to get involved in this, because the more people that are trading on the platform, the more accepted it is, the better off it's going to be when we go and talk to lenders, when we go and talk to investors. And so I want to thank you for that. And all I can say is just come on in, the water's fine. We'd love to have you in here. From my perspective, I've been doing real estate since I was, well, before many of you were born, back in 1982. So I've been doing it for almost 40 years now. Back in the early 80s, the real estate market was going like this. I was a flat-bellied stud, got out of school, could do no wrong, buy something here and sell it the next day for that, until the mid-80s, when the market basically crashed with the Resolution Trust, savings and loan crisis. It was just a terrible time, but it put me into a situation where I had to do workouts. And so it taught me and gave me the foundation to understand debtors' rights, creditors' rights, workouts, restructuring, the bankruptcy code, all of these things that someone in their early 20s didn't really want to know a lot about, but I did. And so I formed a company with the Thatcher family from the United Kingdom. Lady Thatcher was a member of Parliament in Grantham, England, before she became Prime Minister. So we had the Grantham Company. And we basically bought troubled companies. Some were real estate, some were operating companies, and we would turn those around. When she stepped down from being Prime Minister, I became her Chief of Staff, ran her private office, and was the founding treasurer, founding director of the Margaret Thatcher Foundation, and did a lot of stuff that, I don't mind telling you, it was really kind of cool being in your 20s to be able to do those types of things. But what it taught me was how the public and private sector can work really well together. I was exposed to about $27 billion of privatization between British Gas, British Telecom, British Coal, British fill in the blank, of things that we took private. And so fast forward, I became the mayor of the city of Sugar Land, Texas. And that's really what my premise was. Let's privatize, let's focus on public-private partnerships. And if you take a look at the tax rate of the city of Sugar Land, it's the second lowest tax rate in the state of Texas, sitting here today. And that's because of the public and private. And so I've done about $6 billion of P3 type of projects, some from the mayoral side of the dais and some from the private sector side. And I got to tell you, as I was listening to the gentleman, I can't remember his name, from IBM that was talking, I'm a real estate guy. My eyes were glazing over, especially when he brought up all the program and the equations that were up there. I didn't have a clue what he was talking about, but that's the good thing about this. We don't have to have a clue. We don't really have to fully understand the technology. None of us understands how Excel spreadsheets work, but you know, you can get to an equation and an answer. You don't understand the technology behind it. But if you surround yourself, and by coming to these conferences, you're being exposed to kind of the A-team. And I have to tell you, tZERO is the A-team. We're very proud to be working with them. They have 95% of the market share in this space in the United States, which is phenomenal. But more importantly, as we're putting together the strategic plan on going forward for this, they're the ones that are saying, oh, by the way, these are the different service providers that we need to have. Here, let our lawyers assist you in this. So it's a very simple process. I mean, it's a regulated process, there's no question about it, but it is a very simple process. And so if there's one thing I could invite you to do is surround yourself with these people that are much better than you when it comes to this technology, and good things will really happen.
Yeah, perfect. Thanks, David. Those are very kind words.
By the way, that was a plug for you too.
I love it. And it was actually a good segue into our next question. So, what appealed to you with real estate tokenization? I guess, how were you actually initially exposed to the concept of tokenization?
Well, I think from a tokenization standpoint, what's really interesting is I just turned 60. And so there's me sitting around the conference room table. Dr. Oishi, because he's saving lives during the day, isn't at the office every single day. But the rest of the folks, I would say the average age is probably 29, somewhere in that order of magnitude. So they call me Papa Wallace. I'm the old fart in the room. That's what they refer to me as. Sitting around the room, they were always talking about, oh, look at how much money I made in Bitcoin today. Look at how much money I did this. And I just kept shaking my head saying, you guys are crazy. That's air. There's nothing behind it. It's not an asset backed of anything. It's terrible. And so I used to be the biggest skeptic in the room. And then I started going to some of these conferences. And then we started really digging into this and researching exactly the benefits that this can provide, not just to us, our fiduciary responsibilities to the investors. How can it provide benefit to the investors? And so we got into it, and it's funny, you sign a purchase and sale agreement, for a $50 million asset, and you allow yourself 60 days of due diligence. And that you think that's a long time, but this is something that's been going on for years, and something that as we've been researching it, we put together a strategic plan. And I would offer to anybody here, we'd be happy to share that strategic plan with you. It's specific for all the service providers, the industry, the market, how we're doing it, and specific from the capitalization, the economic impact, the benefits to our investors. Be happy to share it with you. Again, we want more and more people involved. But as we started looking at it, we realized that, all right, well, we've got between us and one of our co-development partners about $1.4 billion of multifamily assets. And we are looking at tokenizing and going through digital security tokens on every single one of them. This is we call it our pilot program. And so we're doing it on, it's about a $45 million asset, but more importantly, many of the investors have been in there for over a year. It's a project that's under construction right now. And so the Rule 144 restrictions, and if you don't know anything about that, you basically, if somebody buys a token and they're investing in this particular project, generally there's kind of a lockup provision where they can't just go and market it for the first year. And I'm not going to get into the SEC and the regs on that. But in this situation, we've probably got about 50 accredited investors that enable us to be able to go out and for them to start marketing and to start trading these assets. And it's really a unique situation. I'll talk a little bit more later when we talk about the specifics of this project and what it does mean for the investors. But nevertheless, once we started looking at this particular project, we realized that if we don't do this, we're going to get leapfrogged. And I mean that from a technology standpoint. I mean that from the standpoint of everybody and their brother, from a syndication, from a real estate development standpoint. If you don't get ahead of this power curve, I think you're going to be left behind. And I think it's extremely important. The board of directors of MarketSpace Capital had a vote, unanimously decided to move forward on this particular one, and then we started communicating with all of our investors.
Yeah, no, just to add to that, I'd say that we tried to syndicate as much as possible. Some of the other deals that we did, we were able to lower the barrier of entry to about $25,000 per investor. Still not low enough. Still not low enough to get to where we need to be, where we have full participation of everybody who wants to participate in the real estate market. So this would be the next step for us going forward. And we also looked at the particular project that we are putting up on the market. I think it makes sense to start with this one because it's relatively straightforward. There's not going to be an up and down in rental income during the development period to complicate the calculation of what each share is going to be worth. It's pretty straightforward. It's worth this much now. We expect it to be worth this much when the project is completed. So those are just some extra details.
Yeah, definitely. And from like an academic standpoint, it will be interesting to see this asset trade, through construction, eventual completion, and then, through lease up and allowing investors to essentially, come into like an opportunistic opportunity, potentially exit when it's a core plus opportunity. And then, anyone who's interested in taking that lease up risk can then enter. It's a really fascinating case study. And just jumping back into the outreach process, I guess, how did you reach out to the existing investors, explain tokenization, explain sort of that, added benefit that they'll be receiving on the ATS?
Well, the investors this project was already funded by experienced investors, and we kept the circle pretty small in terms of our initial discussions. We have not approached our entire network or database of investors that we've built organically through our marketing efforts, because of course, we wanted everybody to be comfortable with the idea of going forward with this. We didn't tell investors who were first-time, novices in real estate investing. I can just imagine the kind of responses we would have gotten, like, "Oh, you're going to pay us in Bitcoin?" I was like, "No, that's not what we were. That's not what we're about." But so we're doing this carefully. We're doing this using a select group of investors, and I think that's the right approach for the time being. Of course, we have plans for much more in the future.
So Dr. Oishi is right, but in addition to this, MarketSpace Capital is very strategic, and if there's one bit of advice that I would recommend to everybody here is over-communicate. You do that from an investor standpoint. You want to make sure that from a quarterly report, investor relations, you want to make sure that you are constantly bombarding them with information. Sometimes they may think it's too much information, but that's exactly what we did here. So if we're going to do a covered land play in a particular market 9 months from now, we're going to start talking about it now. We're going to start writing articles now. We're going to start posting blog posts. We're going to start doing webinars now so that we can get our investors acclimated to that particular product type. So we started long ago talking about the digital security token process, and we started talking about the marketplace. We started educating a lot of people. We've written a number of articles. We've had interviews with Forbes magazine. We've had interviews with the Houston Business Journal. We've had the pleasure of Solomon here from tZERO on a couple of those webinars to be able to surround ourselves with the DigiShares of the world, to tZERO, to accounting, legal, and other aspects of this, so that we can make sure that people are educated. But that's not where it stops, because when you start dealing with this, for those of you that are involved in real estate, you know that you have to get this thing called debt. And when you have debt, you obviously have financial covenants and technical covenants in your loan documents. And it's not uncommon to have language in your loan documents that basically say, here's the cap table, and any change of ownership requires approval from the lender. And to take it one step further, in our loan documents, it's not a prohibition, but that lender wants to do a deep dive into anybody that owns more than 10% ownership interest. So what this enables us to be able to do is to incorporate in the digital security tokens, all right, no person can own more than 9.9%. And there are restrictions that are associated with that, and that's the benefit of having this type of technology. But you do have to communicate with your lenders. And I will tell you, in this particular case, we have the bank president, we have the loan officer. The loan officer is in his 30s. So he's the gentleman that you would think from a technology standpoint would really understand this. We had countless meetings with him to educate him. And at the end of it, he always said, it's just like blockchain, right? It's just like Bitcoin. And no, it's not. And so we were constantly having to explain that, so that in the end, they basically can say, we understand it now. And especially when they go to their investment committee, which is made up of 60, 70, and 80-year-old people that really don't understand this, we had to put it into a concise, here's a number of factors. Here's the way it presently is in our current structure, and here's the way the final structure is. And as we went through it in a bullet point format, never using the word blockchain and never using the word cryptocurrency, because that confuses everybody. And I heard Mr. Grossman at the last panel say that exact same thing, and I would strongly recommend that. Say it's nothing more than a banking client that you have that's doing an IPO, and it's the same borrower, same structure, nothing changes, and that's exactly how we had to do it. So it's not just communicating with the investors, it's definitely communicating with your other stakeholders as well.
Yeah, and that's an excellent point. As we reach out to other real estate owners, whether they're private owner operators similar to MarketSpace Capital, institutional owners, fund operators, really across product types, the pitch is liquidity, right? I mean, it's, location, location, location is a real estate adage, but like for the secondary trading, it's liquidity, liquidity, liquidity on the tokenization side. And when we look at the issuance pipeline that we're working with, we have about 150 to 200 issuers that are in our pipeline. About 30% are real estate related. So they're both domestic and international, and really across product types, where a number of our issuers are in, I would say, hyper core types of assets, agriculture, you kind of move a little beyond that in the risk spectrum, triple net leased retail, medical office, keep on going. You've got some multifamily product, and then a number of development deals as well. So, as you're looking at your portfolio, most likely we've kind of seen something similar in our pipeline, and that's something that we're familiar with. And how are you looking on time? So actually, Dr. Oishi, David, and I will be at the conference to take questions outside of it, and I think we might be kind of close to time.
Yeah, I think we started 10 minutes late, and it's about 11:30.
Okay, perfect. So then I'll kind of end it with, sort of final thoughts. Why be an early adopter of tokenization, and where do you see this industry going in the future? Including tZERO as a whole?
My personal opinion is back in 1782, when the New York Stock Exchange was started, you can see how it's advanced to where it is today. And at the risk of really sounding like a paid spokesman for tZERO, I see tZERO as the equivalent from an alternative trading perspective. I really do. When you hear stories about the Kentucky Derby winner, when you hear stories about the Aspen St. Regis, other things that have been very successful, the more and more that this market is accepted. People sitting at my table today, they're in the aircraft leasing business, small fly-by-night companies like Boeing and things like that, where they're basically acquiring those. Think of it from a fractional ownership, where now all of a sudden you can have an ownership interest in a 737 with 5,000 other people and get that type of revenue stream. It doesn't matter what the asset is, it can be asset backed. But we believe that this is truly going to be the future. It enables us to be able to use this technology. It doesn't change anything. If you're an owner, you're still going to get your K1. Whether you own digital security tokens or a limited partnership unit, in effect, it's the exact same thing. And so we think that as you get past that learning curve, educate people, that it's going to be ubiquitous. It really is. And 80% of the people out there want to invest in real estate, yet at this point only 8% of the world does.
Yeah, just to add to that, I think of all the different facets of blockchain technology, we're really just tapping into a couple of them: fractionalization of assets, and of course the essentially diffusion of contract terms that go with each of those bits of the asset. We really haven't explored yet how to raise money on the open market using this kind of technology or other aspects of what's to come. But I think even as it exists today, if what we're doing will provide just a little bit more confidence in our investors to go ahead and invest in real estate, maybe for the first time, maybe they've already been doing it, but they feel better about investing now that they have this sort of extra liquidity that can come with it. I think that would be a positive for the industry and positive for everybody.
Perfect.
Yep.
No, Dr. Oishi, David, thank you for your time. Also, I hope this was informative and helpful for the audience. If you have any questions, feel free to reach out to David, Dr. Oishi, or I. We'll be around the conference to answer anything. But no, thank you for your time. Appreciate it.